Chapter 11, Statement of Cash Flows. In this video, we'll prepare the final section of the Statement of Cash Flows and put it all together to see what it looks like. So the third step in preparing the Statement of Cash Flows is to determine net cash flows from financing activities. In the financing activities section of the Statement of Cash Flows, companies list separately cash inflows, such as borrowing money and issuing stock, and cash outflows, such as repaying amounts borrowed and paying dividends to shareholders. We can find a firm's financing activities, by examining changes in long-term liabilities and stockholders' equity accounts on the balance sheet. So we're told that there are two activities that have to do with financing. First, the increase in common stock. Common stock increased by $5,000 during the year. The additional information tells us that this was because common stock was issued. So that $5,000 would be a cash inflow. $5,000. We received cash for our common stock, so our cash increased, cash inflow. Next, we need to look at our retained earnings account. Our retained earnings and our additional information tells us that we paid $12,000 in dividends. That payment of dividends represents a cash outflow of $12,000. If we were not provided that information directly, we could calculate if any dividends were paid by analyzing the retained earnings account. So our retained earnings account. Our beginning balance on the balance sheet was $41,000. We know we had a net income of $42,000 from our income statement. However, looking at our ending balance on the balance sheet, our retained earnings only has a balance of $71,000. So that means that we had to have paid dividends of some sort, because 41 plus 42 is 83. Our ending balance is not 83,000, it's 71. So we're able to back into dividends paid of $12,000 if we were not given that exact information. So our net cash flows from financing activities is a negative $7,000, an outflow of $7,000. Note, there is also the issue of the increase in notes payable. That's their only long-term liability. And the company had an increase of $20,000. Remember, this was in payment for the equipment and represents a non-cash activity that is disclosed in a note to the financial statements. Therefore, our only cash flows from financing activities have to do with changes in stockholders' equity accounts. So let's put it all together now. Our statement of cash flows. Remember, we already knew these numbers when we set up the format a couple videos ago. We knew our net income was $42,000, and we knew we needed our net increase or decrease in cash to be $14,000 in order to balance to where we need to be. So in looking back at the video from the cash flows from operating activities, we list out all the adjustments to reconcile net income to net cash flows from operating activities to get net cash flows from operating activities of $50,000. Then from our investing activities video, we had net cash flows from investing activities of negative $29,000. Remember, we only had the purchase of investments and the sale of land. That purchase of equipment was by the issuance of a note payable. So we do not have that in the investing activities section. Lastly, our cash flow from financing activities. We issued common stock and paid cash dividends, so our net cash flows from financing was negative $7,000. Again, that note payable shows up in the non-cash activities. $50,000 minus $29,000 minus $7,000 equals our $14,000 net increase in cash. A $14,000 net increase in cash plus our beginning cash balance of $48,000. Also, the ending balance in cash from the previous year, December 31st, just rolls to January 1. 14 plus 48 equals our $62,000 in cash we show on the balance sheet at the end of the period. Then we also have that note of the non-cash activity of purchasing equipment by issuing the note payable. Now you have completed a statement of cash flows. As you see, that operating activity section is the largest section and will take you the most time to prepare. There won't necessarily be as many activities in the investing and financing sections.